Big Market Analytics, and it's Glenn here. I just wanted to get another video in this weekend on a technical update and taking a look at the overall technical view of the market. So let's look at some of these and go into a discussion around them. Let's not waste a lot of time here in the leadoff. Other than I just wanted to say one thing. I'm noticing out there today, it doesn't matter where I go online, there's just so much chatter out there. You know, everybody's got an opinion. It's all talk. I don't see any models to back up the thinking. All I do is see opinions. And this gets to something that really stood out to me in the past month in my own walk. And yes, you know, there's been a lot of failures over the past few years, but I realized in my own walk that without failure in trying to break absolutely 100% new ground in this physics quant-based modeling that I'm working on, I'm doing something that's never been attempted before, and that's to reach 100% predictability of price and time to like I say, 100% perfection ability to predict it. And no one's ever done that before. And everybody said to me, you know what, Glenn, you can't do that. And I said 16 years ago, I disagree. I think there's a first in everything. Now, that may sound crazy to you. Let's put it at 95%. I'd be happy to reach that. But I think it can be 100% predictive. And part of the reason I say that is, and I've been in this position here in backtesting and trying to understand the rules of the model, reworking the math, looking at it, asking it questions. Backtesting takes years, okay? This isn't something you just backtest in months and say, whoa, look, you know, I've got it. It's perfect. No, you have to have full faith and trust in your data. You have to be able to fully understand what price can and cannot do, and you have to be able to make it predictive to extend those target goals out into the future. Now, that is some pretty heavy stuff to do, but I feel like I'm finally at that point in the project. I feel like I am there in so many ways, or pretty close to having it fully worked out. There's still a few questions I need to answer that should be answered soon into the months ahead. There's always a few last questions hanging out, obviously, when you're at a 120-year potentially historic top. And that is the timing of trying to pull this off. Pull this off into what could be the biggest top in history. And then with that data on the other side, it's going to put my team in a position like no other. And that was the whole idea. I've told all my members over on the Discord site, our whole goal is to have the data that nobody else has. We lead, we do not follow. And this idea that everybody hears, you know, all that talk out there, everybody hears, but very few see. I would say at best 1% of the population truly sees. And I don't want to get into that because that's not the time for that now. That could be a whole nother discussion and something I would like to talk about more in the future of what I've discovered on this 16-year road of working on this physics-based math. It's really interesting what else it's uncovered around this idea of the economy within the global colony of people. It's applying space-time physics ideas to the global colony of humans, or God's greatest creation here on Earth, as I like to call it, the colony of humans that lives on this beautiful and magnificent planet. Disclosure, disclaimer, please read it. These charts and updates are for educational and entertainment purposes only. Hope you had a great weekend. I probably will, as we get into this following week, there's a few things I want to point out. We got about a month here until the big earnings. I'm going to point that out here. FANGs has earnings towards the end of October, and so we could have a sell-off into that, and then that's something we're going to watch depending on if we get the sell-off and how deep it goes. We'll look at that in just a second. Let me just put up really quick this quick little promotion I'm doing. I've got a special offer going. I've got some people out presenting my data models at some shows that was going over this weekend. And we're offering a 3-month trial for $299 that can be applied towards a full year subscription, which is very inexpensive. I feel with some of the trades we're going to be offering here, you could pay for this full year subscription in pretty much one trade. It's going to be worth joining. It's going to be worth your time. It's going to grow once people see the value that is available here at West Pacific Market Analytics. And if you like, when you sign up, we can take a look at anything within your portfolio. If you want, we even do a full portfolio analysis. Everything extremely confidential, does not go beyond us. We can talk over the telephone. And anyone before they want to join, if they got questions for me and they'd like to have a telephone call and discuss what I do and what I'm about and my background, etc., I'd be more than happy to do that. So let's get on to it here. Let's get right into the data. Thanks for listening in on that. I do appreciate it. And let's dig in. So you can see I want to start out. We're just going to go over some data here. Let's start here. Over here on the member site, let's go into this first model here on the Dow. Now you can see on this Dow model, you notice here that the velocity is breaking, trend was kind of chopping around here, and this trend is breaking, and you see how now the price is floating out here. We see this on the Dow, and we see the same look on the NDX, right? You see the trend was pretty strong, and then the last all week, 5 bars down, breaking. This looks ready to roll over now. You notice last time we had that sell-off, and it came back up. And you can see how perfectly this is followed to this blue trend. You see the price? It's always followed really well to the blue trend, other than, of course, when the blue trend was way above price and pulling up price. And we can see that same look back here on the Dow, following that blue trend even better. The blue trend represents the velocity of what we're measuring. And you can see here on the velocity, we should be pricing down here. So this is pushing us back to the lows here. So we're going to have to see what this wants to do. It's never popped out like this. We're seeing that in this absolutely kamikaze rally up that we've had, mostly in the AI-based stocks, which are outlined in that AI report. And I think part of it could be, now the data can model that, so it's all reflective into all the velocity and the rest, but we've got so many stocks that Direxion, the ETF, and some of the others have now given double leverage long on, including all the FANG stocks. So we've got a lot of leverage going in on this market. But remember, that leverage can work just as badly to the downside as it did in driving the value of stocks up. Now look at this one particular model here. You notice back here in 2020, you see that right here? You notice here back in 2020 where we had this sell-off, right? You notice the signal went down, and then we had these 3 big monthly bars of that 2020 sell-off. You see the signal went down here. We started to sell off first here in 2022. We had the signal go down, and then the rest of the sell-off occurred. Well, for the third time, we've had that signal go down with a huge trend bar diving lower here, ongoing in September. This is speaking to me. This is saying we could get really interesting here next week. We have not seen the signal go off. The only other times we've had the signal go down has been at that 2020 corrective move and in the latter parts of the 2022 corrective move. So I'm finding that kind of interesting, and we definitely need to keep an eye on that. Now let's keep going here. I wanted to show this. I pulled way out on this particular model because what I wanted to show here was our dot curve. Now, what's been part of my learning curve and understanding is how important both the V channel and the dot curve are to price and time. In other words, if you've got the dot channel in a certain position, and I'm going to show you that in just a moment. Maybe we should have showed that first, what I'm talking about. We'll take a look at the semiconductors, and I'll show you what I mean on that price has to be reactive to it. So in other words, you can see going back here, coming out of the 2003 low here, notice the market coming up, and notice this big dip coming down here. So as the dot curve in the V channel caught up with price, that was where the 2007 corrective move happened. And you can see it coming right down inside the V channel there, and then it all kind of flatlining out here as price started to pull up. And then you notice out of 2012, it's just rising and rising and rising. Well, look, for the first time now, we've had the dot curve roll over. It is very much heading down now. The top of it was right here. Back in right about that time, we got that 61.47 top. And then you notice how it violently sold off into the V channel. And then the indicator of what we're modeling here then was down here. You see, if we pull, let's pull in on this. So you can see that red indicator. You see it right there? It was moving sideways. Price was well above. It came down and it was pretty close to the bottom. So there was room for it to rally back up here to the dot curve since the dot curve had just rolled over. It can do that. But you notice here it came up and it now has overshot. So that indicator has now overshot the dot curve, and the indicator is now with price. Whereas notice on this sell-off, the indicator was down here, and that pulled price down that much. So this indicator now needs to come back here below the dot curve. This could definitely be a very fast and aggressive sell-off. This is not pretty at all. You can see this is the first time in the entire run in this model off the lows here that we've had the Dock curve turning down and a bear cross here of the mock curve. This is very indicative of we are searching for a top right here, because that's just how it works. Now let me go here real quick and pop over here to the semiconductors. I thought I put that semiconductor model in. No, I didn't. Let's go over to the chat. I think I put it over here in the chat. So anyway, I have that here, so let's take a look at that. We've got to watch it here because we've got Meta earnings on October 29th, Amazon's earning on October 30th, Apple on October 30th, Netflix on October 21, which isn't as critical, and then Google on the 4th. So we got to remember here, right at the end of the month of October, we have 4 major, Netflix leading off, but 4 major FANG players, which are all double leveraged now. So, if those earnings are good and you've got double leverage long on those, I think if we get any kind of sell-off that's pretty aggressive here in October ahead of these earnings, we're going to take a really hard look at how far price gets down and then consider what we want to do. Now, of course, these earnings could just take the market even lower. But at the same time, we've got to be looking very careful at that because we've got the FANG earnings all coming out at about the same time. So you can see the idea. Let's look at a couple models here. Here's Tesla, right? So you can see here on this Dock curve idea of that model we were just looking at, you can see once we get up to the Dock curve, here's the first time, but you notice the Dock curve is flattening out right here. So it's only now momentum. Once it flattens out and rolls over, that means momentum is now coming out of the move. And then you can see you get the second push up, which can happen. You come down, it gets too low, it comes back up to the curve, it comes down, it rallies back up to the curve, it comes down, it rallies back up to the curve, and it works its way lower. We can see that also. Let's see, I put semiconductors up here. Let me see if I can find that. We were talking about a few things. I thought I had it here. Well, it was, but maybe I didn't post it. But anyhow, I had semiconductors. We were talking about that. It got put somewhere. We'll look at it another time. But it's the same idea where it keeps working up to the curve. So here we are. Let's keep going. So we looked at that. Let's look at a few more of these data models. Now, this is a panel of 3 models of the same thing. Now, if I had to find still a kind of strong case for the market, it's right here in this model. So you can see that we still got this trend building up here, right? Now, we are already, you notice we came up. Here's this first sell-off. You notice we came up to the Dock curve, we sold back off, and then at 48.39, this indicator turned and it went straight back up. So we're going to need to see this indicator roll back down. Now, notice here that if we go back over here, and again, this has all taken a long time to put this all together, not only to create these data flows, but to understand them. So in other words, you notice how up here, our signal, which we're mirroring here, this line right here is this line over here, we're now at the same high, right? But notice back here, we are priced very, very nicely in the V channel when this indicator was up here. Notice the indicator's back up here, but the V channel is now down here. So this is completely a different setup than what it was here. And you can notice that price only came up to here. The indicator sold off all the way down to this low here. You see it right here? In 2023. And if back then, if we'd been looking at it and we understood it, and I simply did not, because I wasn't sure if things really had to go back up into the Dock curve. What I've come to find out is, yes, you would have known this was a killer buy down here, because yes, this indicator at some point had to go back up here into the V channel and even potentially somewhere hit the Dock curve. And sure enough, you notice it bottomed right here at our 4103 low. So you could say, wow, this is a killer buy, because this indicator now has to rally up and come back up to the Dock curve. And that's exactly what it did. And there was our market rally up. So now what's happened, though, is once you price at the Dock curve, this now gets into a very risky zone. Because as I was saying to you, this indicator has to price into the V channel, which it was working over to, but now that V channel is down here. So this has now got to go all the way down here at some point. But what's going to happen first is this trend's going to have to erode. This indicator's going to have to turn, right? You see right here at our top at 61.47, the indicator turned and sold off. The trend broke down. And right now, the trend hasn't even started to break down. So we're going to have to watch that. But if we go to another model, a bigger picture, that was the weekly we're looking at here, and we go to this, we can see that it topped out here and it's well above the channel here, and it's got a really weak looking structure down here. So it's really not that pretty, but this should get pulled down, but we need to see it happen. You can see it, it's just right up there. So we're going to have to see that happen. And you notice here how it's popped out here. You notice how it came down and then it rallied back up, because it's able to do that because the trend is still strong. Now we're going to have to see if the velocity continues to go out. And it looks pretty ugly actually on the daily model. You can see the daily model here, that indicator is popping out, which has allowed the price to rally. But notice in the past here, here's our 2022 correction. You see that indicator time the market perfectly, right? It came down, market came down into this nice looking valley here, and then the indicator rose back up, starting to pull the market up. Now we can see that the indicator is above, so the market was moving up into it, another minor sell-off, and then out of that 4,100 low, right there, you can see it just went ballistic, right? You see it just went up like that, and then the market rose right up into the trend, and then look what happened at the sell-off here. The trend started breaking, the velocity started breaking, and it all collapsed down again. Now the V channel, it has rolled over. So again, here's that idea. See, the mock has turned and rolled over. That is bearish. Once that rolls over, that is going to start to pull down on this red indicator. This red indicator moves lower, price is going to come down with it. Now the velocity is still rising, so we've got some mixed signals in here. We're going to have to see how this sets up. But it's looking, it's looking pretty toppy there. But, there's a lot that still has to happen. You can see, for instance, in this indicator here, this trend is going to need to break. You notice back here at that last sell-off, the trend broke. And you see every time the trend broke, we got a minor sell-off. But the bigger sell-offs were this one. You can see this bigger sell-off here in 2023 when the trend broke. And you can see these sell-offs back in 2022 with all these trend breaks, right? So we're going to have to see this trend break right here. We're going to have to see this red line come down. So there's still plenty of signals that are going to have to go off before you can say, hey, it's all clear to short the market. Now, there are some indicators, though, that are showing there is something to come. You can see in this one right here, this break. You see right here, if I come in close on this, let's pull back first, and then I'll show you that break, because we're going all the way back here to 2006, 2007, 2008. You see this? And you notice here, look back here, here's our blue velocity, right? And our blue velocity broke there, and our blue velocity is breaking here. But look back when we had the big 2007 sell-off, right? We were already having all these spikes down in velocity. You see the trend spiking down here and the trend spiking down here into the big sell-off. And then we rallied up and the trend spiked down again and the velocity sold off. And we rallied up and the velocity spiked and the price came down again. And then look, it all started to head back up. And look at how price did. Price just rose and rose and rose. It rose until we had our first sell-off here at 4,800. Because you see how the trend, let's pull in on that now. So you see how the trend started to break here and stair-step down? So here was that sell-off we had, right? 4,800 down to 36.36. And then it held, because look how it held with the trend here. We still had, the blue above here. So, it still wasn't that weak. You want it to work up, and sure enough, it did. You see that, and even the signal went up here. But you see, and then of course it stopped right here at 38.38, and then notice how the arc of the trend rose, and price just rose right back up with it. Now, what's interesting is we've got this first break right here. This is an interesting break that we need to watch. Could we begin to see something much bigger develop out into next year? But that break is definitely something to consider, because price should not be up here, right? I mean, price is now fully priced. It's priced above velocity. It's priced above trend. It's going to move lower. We're going to have to see how far. But we're already seeing one sign of the break right there in that really interesting big picture long-term model. And you can see here in this one the same idea. You notice here the trend here has not broken. You see it rising. It has still not rolled over. And you see into this last sell-off here at 61.47, velocity started to break, then it rallied up a little bit, and then it broke. And there was our break right down to 48.36. And you notice it held right here in the trend, and now the trend's rallied back up. So what we are now watching for, because it looks pretty looking back, but it's pretty simple to project it forward. First of all, we know our V channel is down here. So we know that this indicator broke out above the V channel right here. Now we can get these breakouts above the dot curve when it's a very strong move. So the breakout was caused simply out of this 4100 low. We had the trend building, we had the velocity building, that sucked it up here out of the V channel. And then it started to break down. So we've had our first break here. And now we've had this rally back up, and we've had the velocity come up. So what we're watching now again is for this trend to break, for this velocity to break, just like it did over here, and this indicator to roll down. And then we're just going to watch it. We're going to watch it as long as that line can move down, as long as the velocity can move down, and the trend could move down, the price is going to move lower. How far will it go? Well, it can go all the way to the V channel at some point. Now, I don't think we're going to do that in one move. But if this line were to come back down to the V channel, that's going to take us back down to our target lows that we're expecting at some point ahead in 2026, back in the 3,500 area. It's going to go there, but it's just a matter of when we get off this top. Now let's look at these two models. First, let's look at the weekly here. These are the two same models. We're going to look at the weekly, we're going to look at the daily. And we can see back here in the 2020 break, you notice here how we had this big spike down. And there we sold off. We had a little spike down here, we had a small sell-off. And then here was the 2022 move. Big spike down. You see it? Big spike down and coming back up, spike down, and then you see it here. And then finally it rose back up, price rose back up. Here was that minor correction we had in August. And then it just came right back up. Now, if I'd had full faith and trust in all this data, I just would have said, hey, look, guys, this thing hasn't broken. We're priced up here in the trend. There's no break here on the trend. It's just going to keep rising. We're going to have little corrective moves on the way up. And sure enough, as soon as it broke, right there, we got the NDX here, 22.2. We're not looking at SPX here. We're looking at NASDAQ. And you can see it broke. Went from 22 down to 16. It spiked lower. It didn't continue down. The spike ended, and it rose back up. And then we rallied back up. Okay? I mean, where was it wrong? What was wrong was my ability to not put full faith and trust in it and have the ability to fully see what it cannot do and what has to happen. So what would have to happen now, of course, is we're going to have to see a break. Here was a break. Here was a sell-off. Here was a break, here was a sell-off. Okay, yeah, we had a minor sell-off here. We could catch these potentially in other data models, but I'm talking the bigger sell-offs. So this obviously now is going to have to break before we can talk about a top. Now, if we go to the daily model, you can see in the daily model, it broke. So we've got the first, you can see all these little breaks, but this is where we can fine-tune it, because you can see it picked up a lot of the swings much, much better here back in this 2022 move. You see that? Very nicely. So when it spiked up, the rallied up, it came back down, market down. And you can see that nice little spike down here in 21. So let's pull in over here to take a look at this present situation. So you can see here on that 22,000 correction, right? You notice it broke. We had a little break here initially. And we can see it broke, and there was the sell-off. And then, of course, it stopped going down, and then it rose back up. So look, we have a break right here. And right here, just a little bit, we started to come off of that high at 24.8, and we've got a break. So there's our first indicator that something could be going on here. So what we're going to want to do is going to continue to watch this model, the daily, continue to see it break lower, and then see if the weekly wants to follow suit. Now, there are some still really strong data models. Here's one I'm looking at that's never broken, right? I mean, you can see out of the 2020 low here, it's just been up and up and up and up, right? Even when we had our 2022 correction, this thing was stayed above, and so price really wasn't able to break down. And you can see here to this bigger correction, again, price really, this indicator really didn't break down. This indicator is going to have to break down. It broke down pretty aggressively back in 2000 and 2007. Now you can see these three signals, right? You notice here when it did have a small break here in the 2020 correction, we had one of the signals signal down. And notice now we've got these signals that go way back in time here. These go back all the way back to the 2000s and the 2009 lows. And you notice they're all focused up top here. You see all three of these lines have come up top. But this Still, even into the rally, look at it just pushing higher and higher. But it is fully at the top of the model now. So a break in something like this would be very, very significant in marking a bigger top. So we can continue to look at a lot of different technical models. And the whole purpose of this report is to look at technical models. Now I want to finish off, we won't go into all these here. Here's a bunch more I put up here for the members that we were talking about. I call these the 3 keys. And the 3 keys are something that are very important. The 3 keys are the 3 most important internals within market structure. We won't go into those right now. What I want to do is finish with this, because there's a rule within the modeling that I call pink to black. And you notice here we're modeling global finance. So this is not the US, right? This is not including the US. This is global finance throughout the world. And you notice the red here, here is the US. Here's the US corrective move in 2007. But look how big the global finance corrective move was. And you notice it hit the pink line right there. You see it? And usually the rule is once you hit a pink line, this red indicator would have to go to black. And look, right here, lo and behold, we have now topped out on this second rally at the black line. Now that is off of the 2009 low. For the first time, we've got a top out at black. Now that typically, as a rule, is an indicator that we are very, very close to a major top. And then when you see that also in global tech, it really, really piques my interest. And it tells me that we had to have this last rally. You could see the global tech. Look at that. It bottomed out. Here's the 2000 top. The other one was finance, 2007 to 2009. And this one topped out in 2000. You see the red here, 2000. And sold off. And it hit the pink line in late 2002. And so did the market. And notice how it didn't hit the pink line here. Tech held the pink line here in the 2007-2009 corrective move. Well, look, it just hit the black line. So we've had both global tech, non-US, and global finance at the very top of the model. And as I said, I found in my research of working on this project now for 16 years and learning all these rules of the algorithmic code, because it is all rule-based, as is all algorithmic code, no matter where you apply it. Even if you apply it in science or you apply it, as Einstein and many of our very, very top physicists have done, to space and time, it's got the same ideas. And that's why they're constantly trying to test theory to find the rules of quantum physics. It's all rule-based, but the idea, and they're hoping with AI, that maybe they can use AI to better analyze some of that code. Now, I don't know how much success they're going to have with that, because AI in of itself can at some point become predictive, but it's only predictive by being able to use past historic trends. It's not the best at future predictive. I think if they had the right people laying out the data in the modeling, there is some very good potential there. But, there's been a lot of talk that, AI is just overhyped, and I can somewhat think it may be, that it's just a hyped up Google search engine. And in some ways, really, that may be all it is. I think there's a lot more to it than that, of course, but I think we're just giving it too much credibility. I think there's a lot behind this to keep this rally going, to keep this market alive at what I see as an historic 120-year top. So that's enough for today. We got a lot more to share ahead. Thanks for tuning in. Again, hit the like, hit the subscribe if you like. And please stay tuned, just understand that, yes, there have been past failures in much of what I've done. And I'm thankful for those failures, because when you're trying to break new ground, if there's no failures, there's no way you're ever going to be at the top of your game and be able to understand something and doing something that's never been tried before. Thanks for tuning in. Get a hold of me, destinytrading@gmail.com, for our Discord member platform. Talk to me on the phone, questions about your own portfolio. We'd be more than happy to help you in any way I can, because what I'm here to do is to help you succeed, help you get ahead, and protect your wealth base in what lies ahead, because it's going to be pretty radical ahead into the next decade. Thanks for tuning in. Glenn out.